Good morning, friends. It's just a update about the Nifty and other broader market for a short-term to mid-term time frame outlook, technical outlook. The bearish engulfing candle which has been formed in last week has dented the sentiments of bulls on different time frames, at least on a short to mid-term time frame. It has formed a strong bearish engulfing candle on a weekly charts, and actually we are reading that the first leg of correction, which started from the highs of 26 to 70 in September to the lows of 23 to 60, should have witnessed a pullback towards 25 200 to 25 500 zone. So that was the initial midterm target for that pullback, but the index has formed a kind of triple top close to around 24 850 24 900 levels, followed by a bearish engulfing candle. So that bearish engulfing candle indicates some kind of wave 3 kind of pattern which has started, and this pattern will be nullified only if Nifty spot sustains above 24 200 mark for at least couple of weeks. Else, any kind of pullback toward these levels should be looked to reduce our leverage long positions, because we will be expecting lower levels to be tested in weeks to come. The first support will be close to around 23 200 23,000 mark, which was the lows of close to November. But thereafter, lower levels cannot be ruled out. So net, be cautious with the leverage long positions. Try to reduce the positions on the pullback. And as mentioned, 24 200 is very important, followed by 24 800 levels. Only these levels, once taken off, the bias of range to down outlook will be changed. Else, we will be expecting lower levels to be tested in days to come. Even if we see Nifty 500 index, which is trading at 22,400 mark, has a strong resistance at around 23,000 levels, below which the upside is capped with a support at 21,750 and lower 20,250 levels. Nifty mid cap, which ended last session at 57,057 levels, has a resistance at 58,200, below which the bias remains range to down with a support of 55,800 and lower. Same is the case with Nifty small cap index, which is trading at 18,732, remains range to down now. And Bank Nifty, which ended at 51,233, trading below 52,000 mark, will be open towards the lows of 49,500 once again in days to come. So net, unless and until the mentioned resistance levels are being taken off, we will be expecting lower levels to be retested. Out of this negative and range to down uh, outlook, the counters or the index which looks remain range to positive are Nifty Realty Sector, Nifty IT Index, Nifty FMCG, and Nifty Pharma. These are the sectors where the bias is not that negative. Range to downside can be there, but downside move can be looked for to position oneself on the long side. Other counters which we have shared in last sessions, like Reliance and Tata Motors, as per the price study, they have already witnessed a decent correction. For example, if we talk about Tata Motors, it has witnessed a correction from the highs of 1190 to almost 730. It has a midterm support at around 700 650 odd zone. So and some positive divergence are visible. So any kind of dip toward these levels can be looked for hedged long, though the reversal of the trend will be only visible once it sustains above 840. Else, any kind of pullback towards 800 840 is expected to witness fresh round of selling pressure. So the bias is range to down, but pullbacks will be expected in Tata Motors in days to come, trading over and above 650 700 zone. The outlook is hedged long. Reliance is another counter which has been underperforming, and it has reached towards its mean price of last 3 years, which is close to around 1200 mark. So the reversal will be only visible once it sustains about 1360 odd levels, but pullbacks cannot be ruled out. Dips towards 1200 and lower levels like 1120 odd levels can be positioned on a long to hedged outlook bias, with a potential retest of 1280 and 1340 odd levels, though those levels remains a contra sell levels. So resistance 1360 is important for Reliance, while the support at around 1100 and lower will be very important. But net the downside looks capped, and pullback will be expected in days to come in these couple of counters. So broader market is not that positive, but out of that view, we have few selective sectors and the counters where we can position into. Thank you.